So now we're ready to have questions which Becky Quick has selected from those that's been forwarded to her directly and from Carol Loomis and Andrew Ross Sorkin, and Greg and I are available to be, we'll be answering them for some time. So Becky, you're on, and I hope all the I hope everything works.
Yeah, Warren, I should tell you that since you put that address up on the screen, I've gotten more than 2,500 emails that have been coming in. So there is a lot of demand from shareholders wanting to get in and ask questions. And I'll ask some that we've compiled before and some that are coming in right now. The first question, though, comes from one that just came in based on the comments that you were actually saying. This is a question that comes from William Lewis. He said, please, did I understand correctly, Mr. Buffett, to say that Berkshire Hathaway sold its interests in 4 different airlines? And if so, can you name them? Can the names of those airlines be identified?
Yeah, I wouldn't normally talk about it, but I think it requires an explanation, and it requires an explanation that means we were not disappointed being run in the management, but we did come to a different opinion on it. And they're the 4 largest U.S. airlines. It's American Airlines and Delta Airlines and Southwest Airlines and United Continental. And I think collectively they probably are at least 80% of the revenue passenger miles that is flown in the United States, and they have significant international flying too, excluding Southwest. So we like those airlines. But we don't like. The world has changed for the airlines, and I don't know how it's changed, and I hope it corrects itself in a reasonably prompt way. I don't know whether the Americans have now changed their habits or will change their habits because of an extended period, if it happens that we're semi-shut down in the economy. I don't know whether the trends toward what people have been doing by phone. I mean, it's been 7 weeks since I've had a haircut. It's been 7 weeks more than 7 weeks since I put on a tie or anything. Just a question of which sweatsuit I wear. So who knows how we come out of this, but I think that there's certain industries, and unfortunately I think that the airline industry, among others, that are really hurt by a forced, in fact, shut down by events that are far beyond their control. Greg, would you like to add anything to that?
Really nothing to add, Warren.
Okay. Well, we got another Charlie here.
I didn't intend to use that as a line, but you've covered it well.
Yeah, we would have bought other airlines too, incidentally, but those were the 4 big ones, and those are ones we could put some money into, and we put whatever it was, $7 or $8 billion into it, and we did not take out anything like $7 or $8 billion, and that was my mistake. But it's always a problem if there are things on the lower levels of probabilities that happen sometimes, and it happened to the airlines, and I'm the one who made the decision.
But Warren, just to clarify on his question, he asked, did you sell your whole stake in all 4 of those
the
companies?
answer is yes. Yeah, when we sell something, we sell something, very often it's going to be our entire stake. I mean, we don't trim positions or that's just not the way we approach it, any more than if we buy 100% of a business, we're going to sell it down to 90% or 80%. I mean, if we like a business, we're going to buy as much of it as we can and keep it as long as we can. But when we change our mind,
right, the next question.
Go ahead, I'm sorry.
No, go ahead. When you change your mind?
Well, when we change our mind, we don't take half measures or anything of the sort. So I was amazed at how, frankly, now we were selling them at far lower prices than we paid, but I was amazed at the volume. Their airlines always trade in large volume relatively, but we have sold the entire positions.
Okay, thank you. The next question comes from Robert Tomas from Toronto, Canada, and he says, Warren, why are you recommending listeners to buy now, yet you're not comfortable buying now as evidenced by your huge cash position?
Well, as I explained, the position isn't that huge when I look at worst case possibilities. I would say that there are things that I think are quite improbable, and I hope they don't happen, but that doesn't mean they won't happen. I mean, for example, in our insurance business, we could have the world's or the country's #1 hurricane that it's ever had, but that doesn't preclude the fact we could have the biggest earthquake a month later. So we don't prepare ourselves for a single problem. We prepare ourselves for problems that sometimes create their own momentum. I mean, 2008 and 2009, you didn't see all the problems the first day when what really kicked it off was when the Freddie and Fannie, the GSEs, went into conservatorship in early September. And then when money market funds broke the buck, I mean, there are things that trip other things, and we take a very much a worst case scenario into mind that probably is a considerably worse case than most people do. So I don't look at it as huge, and I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period, and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it. You don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago in the annual report, just the one before this most recent one, I pointed out that there have been, for this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, I mean, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the Bible are more subject to fear than others. It's like the virus. It strikes some people with much greater ferocity than others, and fear is something I really never felt financially, but I don't think Charlie's felt it either. But some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And you should not count on somebody else telling you this. You should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And so you should be in a position to hold. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years. Day to buy stocks. I know it will work out over 20 or 30 years. I don't know whether it'll work out over 2 years at all. I have no idea whether you'll be ahead or behind on a stock you buy on Monday morning or the market.
Warren, the next question comes from Scott Kelly, and he writes in based on the numbers you just put up. He said, what did you spend the $426 million on equities in April? Was that adding to existing positions, or was that initiating new positions?
Well, I don't remember, to tell you the truth, but one thing you have to allow for, well, these are the figures for Berkshire Hathaway, and they include both Todd Combs and Ted Weschler manage significant sums of money. So it could well be something they bought. It could be something I bought. But $462 million is not much money at Berkshire. It's more to Todd and Ted than it is to me in terms of our positions. But I literally have no memory of. We're not doing anything big, obviously. We're willing to do something very big. I mean, you could come to me on Monday morning with something that involved 30 or 40 billion or 50 billion dollars, and if we really liked what we were seeing, we would do it, and that will happen someday. If it happens in the market, we can't put it all in 1 day or 1 week or 1 month. It took us months to build up our airline position, many months. We were able to sell them faster than we bought them, but we were selling them at lower prices. The 462 is essentially meaningless, and it may not have even, probably was not mine.
All right, this next question comes from Lee Yandar, and his question is, in the last financial crisis, Berkshire acted as a lender of support for 8 different deals. Despite the injection of expensive capital through preferred stocks and securing warrants, these companies were in fact paying for the sign of confidence from Berkshire in the midst of a crisis, and that was invaluable. Today we have QE infinity, low interest rates, and hungry hedge funds. Even though the economy has deteriorated rapidly over the last few months, why have we not acted as a lender of support yet?
Well, we haven't seen anything attractive. And frankly, it wasn't predicated on this, but the Federal Reserve did the right thing, and they did it very promptly, which they should have, and I salute them for it. But that means that that a lot of companies that needed money and probably should have done their financing a little earlier, but they're perfectly decent companies, got the chance to finance in huge ways in the last 5 weeks or thereabouts. I mean, it's set records. Some companies have come back twice. A number of very big companies that didn't bother to extend out their borrowings came a couple times. Berkshire actually raised some more money. We don't need it, but I think it's still a good idea over time. And then there are some pretty marginal companies that have also had access to money. So there is no shortage of funds at rates which we would not invest at. We have not done anything because we don't see anything that attractive to do. Now that could change, very quickly, or it may not change. But in 2008 and 9, the truth is, we weren't buying those things to make a statement to the world. They may have made a statement to the world to some extent, and I'm glad that they did if they did. But we made them because they seemed intelligent things to do, and markets were such that we didn't really have much competition. Now, it turned out that we would have been a lot better off if we'd waited 4 or 5 months to do similar things. So my timing was actually terrible in 2008 or 9, but what was available was so attractive that even though my timing was terrible, we still came out okay, or a little bit better than okay. But it was not designed. What we did was not designed to make a statement. It was designed to take advantage of what we thought were very attractive terms, but they were terms that nobody else was willing to offer at that time because the market was in a state of panic. And the market in equities was in a state of panic for a short period of time when the virus broke out or spread to the United States, and it became apparent. And the debt market was frozen, or in the process of freezing, and that changed dramatically when the Fed acted, but who knows what happens next week or next month or next year. The Fed doesn't know. I don't know. and nobody knows. There's a lot of different scenarios that can play out, and under some scenarios we'll spend a lot of money, and other scenarios we won't. Greg, you've been watching what's been happening around Berkshire.
Yeah. Well, I think your comment on the Fed, Warren, because as you know, interestingly, when it was first occurring, there were calls coming in, not the size of transactions we're interested in, nor companies we were inclined to act upon, but there was that general interest out there as people were in a difficult point in time, i.e. looking at their balance sheet and deciding what they were going to do. But the reality is those companies were not of interest. And post basically effectively March 23rd, the companies have been able to act. And Warren touched on it at Berkshire Hathaway Energy. Post the Fed action, we actually issued $4 billion of securities. That was associated with some debts or obligations we had maturing, some short-term obligations we wanted to clearly lengthen out. And we pre-funded one of our capital programs at Pacific Corp with the thought this was the time to get the funds in place such that we could proceed with what is really an excellent opportunity both for Pacific Corp, our customers, and ultimately for the Berkshire shareholders. So we've taken action within Berkshire, as Warren noted.
This is a very good time to borrow money, which means it may not be such a great time to lend money, but it's good for the country that it's a good time to borrow money. Not good for Berkshire particularly, although we borrowed some money, so yeah. We've put our money where our mouth is.
That gets kind of to another question that came in from Mark McNicholas in Chicago, Illinois. He says Berkshire itself has a Fort Knox-like balance sheet, but some of its operating companies may be tight on cash during the pandemic. Would Berkshire consider sending cash to its operating companies to, one, ensure that they can get through the pandemic, and two, allow them to increase market share while their competitors struggle?
Well, we've sent money to a few, and we're in a position to do that. We're not going to send money indefinitely to anything where it looks like their future has changed dramatically from what it was a year or so ago, or even 6 months ago. We made that decision in terms of the airline business. We took money out of the business, basically, even at a substantial loss. And we will not fund a company that where we think that it's going to chew up money in the future. We started out with a company like that in our textile business at Berkshire Hathaway in 1965, and we went for 20 years trying to think we could solve something that wasn't that solvable. So we are not in the business of subsidizing any companies with shareholders' money if people want to do that with their own money, but we're not going to do it on their behalf. But we have advanced money. We're perfectly ready to advance money. Gaining market share and all that, that may happen, but the companies that need money probably, market share is not their number one problem, I'll put it that way. Greg, would you?
Yeah. Well, yeah, it's interesting when we look at our different companies as we went into the pandemic or we're addressing the COVID-19 crisis. Obviously, the first focus by our management team, and appropriately, was our employees and effectively making sure they're safe and that the business environment we're in, that they could continue to operate. Then we quickly moved to looking at where our customers were in the cycle, i.e. what was the underlying demand within the business. And to great credit to our managers, they very much have adjusted their businesses consistent with the underlying needs and demands of our customers. So effectively, they're moving with the customer, meaning very few of our businesses have actually required funds. Some have, and as Warren said, we've advanced the funds to them, but the businesses have really reacted in a way where they're managing consistent with where the market's at, i.e. the demand for their products.
Berkshire is almost certain to generate cash. I mean, nothing's 100% certain, and we're, as Greg mentioned, at Berkshire Hathaway Energy, we had some short-term financing. We don't have short-term financing at any degree. We'll never get ourselves in a position where we have a lot of money that can come due tomorrow. And people that were financing heavily with commercial paper and then found their business stopped. Well, you've seen what's happened to the airlines. I mean, they need money. Cruise lines need money. There's some businesses that, it's just the nature of what they're in. Berkshire will never get it in a position where it needs money. And we factor in, like I say, we factor in some things that are not ridiculously unlikely. And I'm not going to spell out scenarios because to some extent, if you start spelling out scenarios, you may increase the chance of them happening. So it's not something that we really want to talk about a lot. But our position will be to stay at Fort Knox, but we don't need we don't need a 100. It's a little higher now than it was at quarter end. We don't need 130 or 35 billion, but we need a lot of money that's always available, and that means we own nothing but Treasury bills. I mean, we never buy commercial paper. We don't count on bank lines. One or two of our subsidiaries, a few of our subsidiaries have them, but we basically want to be in a position to get through anything, and we hope that doesn't happen, but want to be in a position to get through anything, and we hope that doesn't happen, but you can't rule out the possibility any more than in 1929 you could rule out the possibility that you would be waiting until 1955 or the end of 1954 to 1955 or the end of 1954 to get even. Anything can happen, and we want to be prepared for anything. But we also want to do big things. If the prices are attractive, as Greg said, there was a period right before the Fed acted. We were starting to get calls. They weren't attractive calls, but we were getting calls, and the companies we were getting calls from after the Fed acted, a number of them were able to get money in the public market, frankly, at terms that we wouldn't have given it to them.
All right, this next question is one that, Greg, you actually touched on the answer to this to some extent, but maybe the two of you could expand on it. It comes from Richard Surser from Tucson, Arizona. He says, Berkshire's annual report indicated that Berkshire had 391,539 employees at the end of 2019. Which areas of our operations have already been hardest hit or will be by the coronavirus pandemic, and what are the implications for the continued employment of those people?
Those people are employed in dozens and dozens of different industries, and there are a few industries that there's a fair likelihood that our employment could be reduced, but they're not large. I'm just thinking as I'm talking. I mean, it's not like we're in the some of the businesses that are, we're not in the hotel business or various aspects of travel and entertainment and all of that could really be changed in a very major way. So I don't see our employment. I'll put it this way: 5 years from now, I think Berkshire will be employing considerably more people, and I don't see where we'll have large dips, but the virus could take off in certain ways that in some of our manufacturing businesses, for example, the demand could be dramatically reduced, and in those cases we would have layoffs at some point. Greg?
What I would add, Warren, is that as we are in the sort of crux of the pandemic. We're still dealing with it, so our businesses have adjusted. Some have had to adjust more. We have, if you look at Berkshire Hathaway Energy, for example, you can see U.S. electricity consumption's down 4%. That realistically doesn't impact that business in a significant way, and longer term we'll continue to grow that business. So even during the crisis, a relatively small impact to the business. But as Warren knows, we do have retailers that their doors are shut right now, be it our See's Candy, some of our jewelers, and at that point in time, we do adjust and adapt to the environment, i.e. we adjust our workforce, but equally we do see, for example, See's, at a point our stores will reopen, and at that point we reemploy the folks. And overall for Berkshire as a whole, as Warren said, 5 years from now, we see our employment numbers being far greater than they are today, in that we see great prospects within the operating businesses as a whole.
Yeah, See's is an interesting example because we've owned that since 1972. That's a long time, and we love it, and we continue to love it. And I have a box here of our peanut brittle, and I've got another box of fudge right here, and I'll probably take them all home and not share with Greg. But we were in the midst of our Easter season, and Easter is a big sales period for See's, and I don't know whether we were halfway through, but we weren't halfway through in terms of the volume that was going to be delivered, because it comes toward the end. And essentially we were shut down, and we remain shut down. The malls, we've got 220 or so retail stores, and we've got a lot of when Furniture Mart sells our candy, but the Furniture Mart's closed down. And so See's business stopped. And it's a very seasonal business to start with, so we have a lot of seasonal workers, too, that come in, particularly for the Christmas season. But we have a lot of Easter candy. I mean, Easter candy's kind of specialized, too, so we won't sell it. And we produced a good bit of it, and we couldn't ship it, and we couldn't put it in stores, and there's some of that's going on, and of course Greg does all the work on those sort of situations, and our managers are terrific, of course, in dealing with it. But this is a very, very unusual period, and like I say, a few years from now, I think Berkshire will be employing more people than 395,000. Over the years, we started with 2,000 at the textile business, and we've still got the same playbook.
This next question comes from Drew Johnson, who says that he's a longtime shareholder who's attended a couple of meetings. He says in an interview on April 17th, Charlie mentioned that some small businesses owned by Berkshire would not reopen after the pandemic eases. Can you elaborate on which businesses might be impacted?
Well, even we have businesses within businesses. At Marmon, don't we have 97 different businesses, for example?
Exactly, yep.
Yeah, and there are some that weren't doing that well before. And I'm not talking about Marmon specifically, but they got a couple of them, and there's a couple of, and it may be that in effect what's happened in the last couple of months has accelerated the decline of those businesses, or their customers are developing different habits. I mean, people are developing different habits in retail. There's no question about that. Now, that doesn't mean we haven't got a bunch of good retail businesses, but there are businesses that were having problems before, and that have even greater problems now. We don't own our newspapers anymore, but we're financing Lee Enterprise, which does have them. We've actually increased our investment in the newspaper business by selling the papers to Lee and then refinancing their debt. And the newspaper business was having plenty of problems with both circulation and advertising before the virus came along, but advertising declines every place have accelerated fairly dramatically. And when the automobile industry stops, the auto dealers don't advertise as much. It's made certain businesses that were tough before even tougher now, and there will be in the management of at least one of the subsidiaries is suggested to us, and so there'll be some changes at a few businesses, but they're very small businesses. Our major businesses and our business of intermediate size, I can't think of anything that's of significance that won't reopen. But it won't be any fun with the businesses where the world has really changed. You're seeing a lot of change. If you own a shopping center, you've got a bunch of tenants that don't want to pay you right now. We don't, and the supply and demand for retail space may change fairly significantly. The supply and demand for office space may change significantly. A lot of people have learned that they can work at home, or that there's other methods of conducting their business than they might have thought from what they were doing a couple of years ago. And when change happens in the world, you adjust to it.
Yeah, I think go ahead.
Becky, I think Greg won. Yeah.
Oh,
Well,
sorry,
I
Greg.
was just going to add
Go ahead,
on the
Greg.
Marmon example, our 97 companies there. For example, we have a food service group which sells equipment to a variety of the restaurants. We have a few businesses that realistically were challenged when the industry was performing really well. And as we come out of the crisis, their economic prospects aren't going to be better. And in fairness to the teams and the employees in there, they understand that and they're working through it. And there'll be other opportunities potentially within the company, within Marmon and things like that. But there's a very specific answer or example relative to the question.
This next question is a follow-up on that. It comes from Chris Freed of Philadelphia. And he says it's been a long-term policy of Berkshire to not sell or close any ongoing subsidiaries as long as their business prospects weren't a money hole. Over the last year, he points out the sale of Berkshire Hathaway Media, and then Charlie's comments from that interview saying that several small Berkshire subsidiaries will not be opening when the coronavirus lockdown is lifted. So should shareholders assume that Berkshire has now changed its long-term policy in regards to keeping underperforming subsidiaries around?
I think that policy was spelled out for maybe 30 years or so in an addendum in the annual report, that we have said that if a company or if an operation, we think its prospects are that it will continually lose money in the future, that we will certainly we'll try to sell it to somebody else, but one way or another we will not continue to hold it. And that is not a new policy, and it's not been changed. You can say, in effect, we did that with the airline industry to some extent. If we owned all of an airline now, it would be a tough decision to decide whether to sustain billions of dollars in operating losses when you don't know how long it's going to happen or occur, and secondly, you know that it's very likely that there'll be too many planes around. And we know what happens in airline pricing when load factors go down and there's an oversupply of airline seats. So, we didn't have to make that decision in terms of our own operation on it, but we did make a decision that's a very tough management decision to make. And the government, of course, they've had the first wave of financing for the airlines, but to the airlines' credit, they have very aggressively raised money. I mean, it's amazing to me what a good job they've done of that. And in the case of, I think in the case of two of them, but there may be more coming. they've raised equity money too. I mean, they are saying to the debt holders and investors, you've got to put more money into this business if we're going to be able to continue. And the government's done it, and private sources have done it, and it's exactly the right thing for the managements to be doing. But whether it makes sense, we'll find out for the investors.
This next question comes from Eric Lafont, and it's directed to Greg. He asks, how is Precision Castparts handling the severe slowdown in the aerospace industry?
So very consistent with everything we've just discussed, which is obviously a large part of their business is the aerospace industry. And it can really be broken into three areas as we do in our queue, but two are being impacted. The defense contract business remains very sound and strong within Precision Castparts. But if you look at the large body aircraft, the aircraft that they use within the regional jets, that business will move directly with the demand there and the jets that are ordered longer term. So Precision Castparts is literally, as we speak, continuing to adjust their business relative to the demand that would come out of Boeing. They would be having weekly calls with Boeing, recognizing what are the production orders there and adjusting the business accordingly.
Boeing raised $25 billion just a day or two ago, and they raised $14 billion before that, and a year ago they felt they were in a fine cash position, and I understand how all that happened. Airbus has had the same situation. They've made some comments recently within the last week, the fact that they really don't know what their future is, and I don't know what their future is. We're gonna have aircraft in this country. We're gonna be flying, but the real question is whether you need a lot of new planes or not, and when you're likely to need them, and it affects a lot of people, and it certainly affects Precision Castparts. It affects General Electric. It obviously affects Boeing, it is a blow to essentially have your demand dry up, and it goes up in the chain, and the aircraft manufacturers didn't bring it on themselves. The airlines didn't bring it on themselves. Precision Castparts didn't bring it on itself. General Electric didn't. It's basically that we shut off air travel in this country, and what that does to people's habits, how they behave in the future, it's just hard to evaluate. I don't know the answer, but we do know that it will have an effect on Precision Castparts, and how severe it will be, it depends on the same sort of variables that are hitting Boeing and you name the company in aircrafts. And aircraft's a big business. And this country's good at it, incidentally, too. I mean, if you think about Boeing, it is one hell of a company, and it's important. It's a huge exporter, and it affects a lot of jobs, and some of them are with us. And we hope for the best, and we wish everybody the best, obviously, and we wish ourselves the best in it. But part of it is certainly out of our control.
Right.
This next question is for Warren. Do you think GEICO will experience unusually high profitability in 2020 due to the reduced amount of driving, even after giving customers a 15% credit?
Well, we have promised to give our customers, at GEICO, we're the second largest auto insurance company, and different auto insurers are handling a sharing of the better experience with their policyholders in different ways. Our plan will deliver back $2.5 billion roughly or so in recognizing the reduced frequency of accidents during this period. What we don't know is how long this will continue. I mean, people want to drive their cars still, but conditions have reduced that driving dramatically, obviously. Now, we have instituted a program that runs saving people money for 6 months, and so far other people have largely been 2 months, but some of them have given a little more for those 2 months than we give per month. Our total is the greatest at $2.5 billion, and in addition to that, we and all the others in the industry, it's not just GEICO, we've also, and insurance commissioners in many cases, I believe, have required it, but we have, we give people more time to pay if they aren't paying, and if they cancel their policy or if they don't end up paying us, we've in effect giving them free insurance during that period. And the delay in payments is obviously increased. Delay of payments on, if you got a shopping center getting rent, the delay in payments is what happens during a period like this. And that will be a significant cost to us. We don't know how significant it will be. There will be more uninsured motorists driving, and they cause a disproportionate amount of accidents. And so there's a lot of variables. We made our best guess as to what we're going to do to reflect the current reduced accidents in our premiums that we receive, really over the next year. It applies for a 6-month on renewals, but that we'll be renewing policies in October that will extend it then next April. And so we've made a guess on it, and we'll see how it works out.
This next question comes from Steven Stoller. He's a shareholder in Atlanta, Georgia, and he says, would you please help us understand the effects of COVID-19 on our insurance businesses? Other insurance companies have reported losses from boosting reserves for future insurance claims that they expect to be paying as a result of coronavirus. Yet in Berkshire's 10Q released this morning, we do not appear to have reported much of these future expected losses. Can you tell us why this is the case? What kind of risks Berkshire is underwriting that allows us not to be affected by the pandemic, or conversely, what we are writing that might be?
Well, the amount of litigation that is going to be generated out of what's already happened, let alone what may happen, is going to be huge. Now, just the cost of defending litigation is a huge, enormous expense, depending on how much there is. Now, in the auto insurance field, which is our #1 field in terms of premium volume by some margin, that's more definable. But who knows what comes out of it in terms of litigation. But in what they call commercial multiple peril, which involves property losses, and where some people elect to buy business interruption coverage, many policies, quite clearly in the contract language, would not have a claim for business interruption under a commercial multiple peril policy where you've elected that. But other policies do. I think I know of one company, I don't know the details, that's written a fair amount where they cover, or certainly there's a good argument perhaps that they cover business interruption that might arise from a pandemic. Well, they're in a very different position than the standard language, which says that you recover for business interruption only if there's involves physical damage to the property. And you can buy all kinds of different policies. We are not big in the commercial multiple peril business. So I mean, this is not like our auto business or anything of the sort. But we will have claims, we'll have litigation costs, but proportionally, it's not the same with us as with some other companies which have been much heavier in writing business interruption as part of a commercial multiple peril. But you don't automatically get coverage if you have business interruption. I mean, for example, I think it would be unusual if, say, General Motors had a strike, which they did, and that they have business interruption that covers the strike. Now, we actually wrote about, probably the only annual report in the United States, we wrote about business interruption insurance because we had it over in France when one of our properties was adjacent to a property that's much smaller property that had a fire, and then it spread to our plant, and it caused a lot of physical damage, and we have business interruption that ties in with that. But if we had some company we were selling auto parts to and they had a strike, our business would be interrupted, but it's not covered by that is not part of the coverage unless you specifically really buy it. So there's some claims that are going to be very valid related to this, the present situation. There'll be an awful lot that there'll be litigation on that won't be valid, and there's no question that some insurance companies, I know one in particular, that will pay a lot of money relative to their size in terms of policies that they've written. And I think we have reserved, and our history shows we generally have reserved on the conservative side adequately, at least. And that's certainly our intent. And we tell no managers of any of our insurance operations what numbers we expect from them or do any of that. That they evaluate their losses and they build in something for social inflation. They build in things for all kinds of things. And generally speaking, Berkshire's been pretty accurate in its reserving, and I have no reason to think that we're otherwise than that currently.
Stephen Tedder from Atlanta, who says he's a 10-year Berkshire shareholder, writes in and he says, do you see Berkshire offering pandemic coverage in future insurance policies?
Well, the answer is we insure a lot of things. Sure. I don't. We had somebody come to us the other day wanting insurance involving a $10 billion protection on something very unusual. We're not going to make that deal in all probability. In fact, I would say it's dead. But we would have written pandemic insurance if people had come to us and offered us what we thought